Hey everybody, welcome back to Trading ThinkScript. My name is Mike Fairborn. It's great to be here with you today. Looking forward to our discussions. I wanted to review a couple of different scans that we had looked at previously, and I had a topic request on a candlestick. I wanted to go ahead and take a look at that initially. Also want to do some trading within ThinkScript and looking at some of the gap and goes out there, something we created a while ago. Since we are in the midst of earnings season, can be very interesting to take a look at those gap and goes, as well as maybe some of the TTM squeezes on a different time frame. So quite a bit to look at today, and definitely some code to review. But with that, welcome to each of you. Joining the chat by Kevin Horner, good friend and colleague of mine. KH, you'll see him in the chat. How's it going, Kevin? Be sure to follow Kevin on X, Kevin Horner CS. He's got a lot of great stuff there. I'm Mike Fairborn CS. And hello to each of you. We've got Helen. How are you, Helen? As well as Will, the Sunset Guy. Perfect. We've got Rojo in there. We've got John, the Noble Savage, as well as Robert Boucher. In fact, we're going to be looking at one of the codes that I originally got from Robert as it done. It was a while ago, but it was really unique at the time, and really it still is unique and will remain unique. But it's great in terms of earnings and quarterly beats. And so I wanted to highlight that as well. I did get permission to do that from Mr. Boucher on that, and great to have you here, as well as Life in the Fast Lane, JV Texan, Riceberg, and others. Yes, indeed, Helen, they are all awesome scans, right? You can do a lot of great stuff here. Hello to you, James, as well. And looking forward to it, folks. Before that, let's go ahead and dive on in. I'll take a look at some of those notes here that you've got, but we'll dive into some disclosures here and get started. Okay, information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Now, the paper money software application is provided for education purposes only. Backtesting results are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results going forward. Investing does involve risk, including for some products more than your initial investment. Now, past performance of any security strategy does not guarantee future results or success. Quick look at our futures. Futures and options trading does involve substantial risk and is not suitable for all investors. We just look at the charts, though. We don't actually look at trading. We have other classes that look at paper trades for futures, but just charts here. All right, and that is what we got for our disclosures. So let's just scoot on over, just mosey on over to our page over here. Take a look at those futures here. What are we getting? Wow. So market's really responding, quite well here. In fact, you can see market's up. There's your ES right there, breaking above highs. That is, again, folks, another all-time high. Let's call it what it is. That's all time. If I just do one more click over to the right, there's your weekly, and we do not have another one of these over here that's at a higher level previously to take a look at. So that is a very, very big size move. As well, you don't need me to tell you that. You guys can see that very, very clearly here. And with that, I just wanted to show you that within this high range, currently we're getting a little bit of a pullback within oil. Now, one thing just to park in the back of your minds, one of the things I will talk about in my markets and sectors class that I don't have up, we don't have, because we've got, by the way, tomorrow we've got National Investors Day. So it's a break from our regular classes, but I wanted to let you guys know that that is there. We've got some great topics on schedule for tomorrow. And the final one of the day, I'm doing one on retirement strategies with Cooper Howard. He's a director uh, of income planning and fixed income strategies as well. It's going to be great to be on there with him. I'm actually more of a host role there, but looking forward to that very much so. Just to highlight that, so we won't be teaching our regular classes, which gets me back to my original point that the markets and sectors class I don't have. So I just want to state one thing here because I don't have that class tomorrow. Just as a side note, guys, because as we are looking at developing ThinkScripts that may be bullish, maybe bearish, whatever the case might be, looking at CL right here, we have seen a little bit of a bounce back in the price of oil. Now, keep in mind that the Straits of Hormuz are currently closed. We don't know what will happen over an extended period of time. And this is not a political statement at all. I don't want to get anybody the wrong idea because I had a couple of responses on this. All I'm just trying to state is just be mindful of what that might mean for the price of oil going higher. Could it continue to spike and go up? This is kind of one of those price patterns that is sort of like this. It's sort of like a little bit of a pennant type pattern. We're looking at CL, folks, for those of you just turning in Texas terms. This is oil. And it could, I don't, I mean, is it going to continue up in terms of a swing trade? That's the question mark. If it does, what happens over here if we spike? I'm just saying this here right now. If we did have a spike and we did one of, let's just be honest, if it did one of these, because we got to be honest, we got to look at it. Here is your, I mean, that's the top of the move. If this were a swing trade, bare minimum, you'd be looking at something like that. So 140, question mark, maybe 150. Does that impact the markets? Does it shake it or not? That's the question mark. Just be mindful of that. That's all I'm saying. I try to just, state what we're seeing in the markets, just to be mindful and be prepared for it. Okay. But we don't know. I mean, and maybe it gets resolved right away. And that would be something very, very positive where the market, and then in turn, because we want to look at both sides, the markets could then maybe break and possibly do one of these, kind of like this move here. See the sideways move? It's almost like a sort of a flat pattern. Now, keep in mind, historical PE ratios are about 22 on the S&P 500 index, and that can vary a little bit, but that's historical PE, and that's really quite high above average. But like I said, I mean, could it move? There's your pattern. We broke above 7,000. AI could be putting, pressure on the markets. Some of the gap and goes that I wanted to look at today do involve AI type companies like Google. You've got some others out there too, semiconductor type companies too. They're tied into it. All right. Now, let's do this. I did want to make sure I got this question earlier from James, who typed it in a little bit early. Uh, More like gap and drop today. Oh, that's what we say. Okay. Yeah. We can look at both. We got gap and drops and gap and goes. But there are some earnings that did fail today. There are some big ones out there as well. So let's do this. James had brought a different James, or Michael. I'm sorry, it was Michael that brought up a different question yesterday. It basically just said this. I just want to correct this because remember last week, if you guys recall, we were running through a basic sort of a scan. And this scan we just developed last week because we did a couple of paper money. Well, we did a couple of not, well, everything's in paper money, but we did a couple of condition wizard scans. This was the scan we were looking at volatility and just saying general ways to create a volatility scan. That's all we were looking at. Now over here, you can see I'm in the scan in the stock. I'm going to stay in the stock hacker this time. I'm going to run something here a little bit different. Okay, there is the option scan over here. We're not going to be using options, but there is the scan right there that we're going to be using. Last week we had an issue, but it may have been something incredibly easy and straightforward. I'll show it to you right now that I was running, but as I was presenting, I didn't quite show the same thing. So it was this. And so if we are in the condition wizard and we were looking at one of the studies and it was implied volatility right here, right? And we said implied volatility was crossing above a particular level, and we were looking at that value. And notice the default here is, in the hundreds over here. We're looking at it on the other side of that decimal, like this. And that was the big kind of fix there we could be looking at. So if volatility, we look at the VIX was 25 and we were double that or something, it was just an example. We just crossed above the 50 area in the last couple bars, or well, I'll just say 5, just so we get some here. But we were not getting anything. It was the 0.5 that was doing it. I was doing 5 because the default, just as a quick note, is to the left of the decimal, not to the right of the decimal. And that's the key difference here. Implied volatility, let's just make sure that this worked here so that we're lining everything up. There is your implied volatility. We'll put it up top, click OK, and we'll pull it over to the left here. There you are. There you go. So crossing above in the last 3 days. We didn't say it had to be above there. It looks like Oxy probably went above and then went back down below. It's in that range. Let's just do this as an example. I still have it down below here because I wanted to highlight it. There's your Oxy. Do you see we did barely hit above 50 and there. So there were, although we do not talk, we're not going to be addressing options in this class today. I just wanted to highlight that to show it to you, what we were looking at. Okay, and Helen, you did mention about the a quick note on the sector comparison chart. I have that. Did you guys catch that though? So that's all we're doing. It was just simply the point uh, 5 or whatever we're looking at. Volatility is not up to 1, it's below 1, but the default here is like this. It's 100. And so that I was going something like this, like 50. All right. So appreciate that correction. And that's what it was. That's what was throwing us off last week. That's why it was working before the class and it wasn't working during, because I was just throwing in numbers with some of our other trades. Now, with Helen, yes, we do have this, and I can share this as well. Now, this one we just built, and so I don't need to share it. We just built that within the condition wizard. Now, coming over here, we do have a couple of different classes. Or let's see. This was a, Helen, let me just make sure. I believe this was, you said, sector comparison chart, percent changes, yes. And I have that just right here. I have a sector grid 6 months. I'll share that right now so you have it. This is all 11 of those, except this is the 11, except the market down here, SPX. So you've got all of the S&P 500 sectors from there. By the way, I need to note this, that ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data that's coming into the platform is accurate, it's kind of it's just, basically a mathematical thing. But we needed to state that. Not guaranteed for timeliness or accuracy. Okay, so these are all S&P 500 companies that make up each one of these. And you notice over here, I just put the little, yeah, we use a little ThinkScript too to put the labels in each one with the percent change on the day so you can see those. Pretty helpful. You get to see what has been moving. And by the way, look at this. We don't know if this is going to flag, but could there be companies, say, for example, within consumer discretionary that are flagging? Oh, yeah, there could be, because the whole group is. And by the way, there may be, actually, I believe there are ETFs. In fact, I know there are ETFs that people trade specifically just in these particular groups. Now, we don't go into that in this class, ETFs, but just wanted to highlight that. Look at Infotech. Kind of that's what's really been, if you look at these two, holding up the markets. Okay, I got a lot to get to, but I wanted to highlight this. Let me send this out, and I will have this in the description section underneath the YouTube video for anybody who wants it as well. But let's just share the grid. And I believe that's what you were referring to, Helen. Let me know otherwise, but sector comp grid. All right, there you go. So that is in the chat, and we're off and going here. Okay, good. Got to move forward here a little bit. I definitely read through the questions at the end so I can try to create those topics into next week, and I'm going to try to be very strict with myself on that and get every single one so we can address these going forward. Now, we did have one actually from a class earlier this week, a topic request, and it was about just the creation of a hammer type pattern. The hammer, for example, if I could just, sometimes a lot of times you'll find them at the bottom, and here is like a classic type hammer. Just happen to have AVGO chart up right there. Described as, a standard hammer, the wick of the candle or the shadow referred to as this needs to be at least twice the length of the body. You might be getting that with something there, but at least. So in other words, you might have a longer one, but you wouldn't have like one of these. This is not considered to be a hammer type pattern. Very, very short, for example. Got to be 2 times the width this does of the body of the candle itself. And a lot of times these just represent reversals in the market. Now, there are some cool things out here. I did create just a quick one that we could put together from another candlestick that we'd done in the past. Now, look at this. In order to do this, if I just go to the scan tab, we can change this. I'll just kill this for now. And we can actually create one here too, just using pre-built. Not pre-built indicator. Well, it's part of a pre-built indicator, but we have to just adjust it a little bit. Now, what are we in right now? We want to do what? We want to scan for hammer patterns, which was the request. And so one thing we can do is we can just use those pre-built tools. I'll show you also a code here in just a second, but while we've got it, yeah, if you come in here, just Condition Wizard, it's really kind of advanced at this stage. It's getting more advanced. They're putting some additional features in here and there. Here is just type it in, hammer. You know what the other thing is? When you got the hammer, just to be mindful when we're doing this, yeah, you got the hammer on one side, but on the other end, which might happen more towards the top, you have a shooting star. And, you know, just to bring that up as we go into the study, because it is the candlestick is like a study. See that? You got the shooting star as well. So many of these are already pre-built in here. Didn't have time to go through that yesterday as the chat guy. But here you go. Now, as we look at this, I'm just going to call it is true. You're getting it within how many bars? Let's just say you had it within the last 3 bars, for example. You could do this, okay? Well, let's just say 3 to 5, whatever, 5 bars, fine. We'll go 5 bars. That's the only thing. You want the hammer to occur. This is to occur within 5 bars. If you come over here, you're going to get some explanations. The length of time that we're looking at, you have to have a certain number of bars. Is there a trend associated with it? Is there a body factor? Now, let's click on it because this is something I actually used on the other code. The factor used when checking if a candle is short. A candle is considered short if its body height is lower than the average multiplied by this factor. You know what? You're really looking at, here is the whole entire candle. You're looking for it to be in the upper 30%. If you had a line like this and you had something over here, well, it might not be the same. It's like, well, that's kind of a doji. It's something different, but it's not in the upper 30%. Okay, the body factor. Now, what about the shadow? 2. We talked about 2 times. Mine runs a little bit different. I'm going to show you this though right now so you guys have this. But just to be, well, let's see. Forget it. It's not going to come up. I don't want to waste the time. It might come up here for you guys as automatically. I'm on the demo account. But if I just save this, remember this is looking back 5 bars. That's it. It's already pre-built. The hammer. Those specifications are there. You have to really keep a close watch on that. Now, could we add more to this? We sure could. You're looking at the code. That's it. It's very, very simple. Let's run that on the S&P 500, and we've got some here. So what is this? SNPS Take-Two Interactive, PG as well. Remember, last 5 bars. Did we spot one in the last 5? I'm seeing one today. Do you see it? Right there. Now, this is a confluence of candle bars too, but beautifully done. It's right there at your fingertips. So easy, so simple to do right there. Okay, that's also known as a harami right now. Okay, the market hasn't closed yet, so I can't call it a harami. I can't even call it a candle, a hammer till it's a hammer. Like right now it is, but remember, there's still time left in the day. So park that in the back of your mind for sure. But there you have it. And let's see, there's Deepak. Yep, so that's the one we built. Yes, yes, and we do have what's referred to as a Cahold, and I can show you that as well because that's like the next thing up. I wanted to kind of build on this because do you want to get maybe some sort of indication? Some traders would call it a confirmatory follow through. Does it mean it's going to keep going higher? No, but did it confirm today's low in terms of that being the low? Yeah, it could have done that. So you're just looking for a close above the high of the low day is what the CAHOLD stands for. That's the acronym for it. And you're just looking at a move above that particular level. Now, do we have that? We do, but I want to make sure we're clear on this. Let's hit one more, and then I'll just go into that CAHOLD TTW. Oh, okay. These guys do the GTA. Oh, well, there you go. See how this looks a little bit different? That would be the Grand Theft Auto game series. This is it though. Gosh, we have a few of them. That's like close to one yesterday. It's setting up as maybe one today. But what are you getting this in? It's sort of like this. This is interesting too. So you can find these hammer patterns, like again, a confluence maybe of there's one there, maybe here, close. And then today we're seeing one. By the way, that was running the last 5 days, so maybe we're just pulling this one. But do you see the potential pattern? Look at the double bottom. This is a higher low. If we start to maybe break above this level, question mark, could be of interest, right? It's a higher low, but of course there are earnings over here too. Okay, so we've got that. Now, um, let's just show you this over here too. We had the holds, so another way to trade with these. But yeah, the hammer pattern could trade with it. By the way, quick note over here, once you get these built, just like I showed you, just make sure you go up top and you save those. You save it, or you save that scan. Click on that middle hamburger icon again and load it. They're all going to be there in your personal folders, okay? You'll find them there. You got it there? We're set and ready to go on that. Okay. Yes, you can get confirmations coming in. We did let me just double check on this because I did have the Cahold in here. Mm, I build it differently. It's up here. We did it as and in fact, I'll just pull it over here so we can pull one up real quickly as a follow-through bar. And then I'll move on to some of the earnings gap and goes as well, potential price action. But we have, uh, okay, Cahold. I might have called it something different. And maybe it's not. Oh, there it is. The bull flag plus Cahold. So this is kind of in a bull flag type formation. Now this will load up, but I want to show you what's happening here. I can share this script because it is a think script. Again, not guaranteed for time or accuracy, but here's Disney. There you go. Okay, now was there a hammer for certain there? No, but a lot of times you get hammer-ish. Now we could create the possibility of a Cahold. It's showing a Cahold right now, but it is not technically a Cahold. It's not closed above the high to low day because the market's still open. But it might with a bar like this. Do you see the flag pattern developing here? Do you see it? That's the follow through. That's the bounce that traders will look through because it's closing above the high of the low day. That was the low day right there. It's not counting today's bar, but there you go. That's the flag plus the Cahold. One more just to take a look at it. FFIV. This is within the past couple of days. That is a Cahold. So like we go back and make sure, Costco too. Yeah. So that's still referred to as like a bull flag, and potentially there is your Cahold right there. So let me just do this. I will, let me see, I can just share it from here, right? Share, there it is. I'll put this in the chat box, and then again, I'll put that in the description field down below. Flag plus Cahold. All right, just wanted to get that while we're at it. All right. Now, you guys, we are in the midst of earnings season, and yes, we are going into gaps. Behavior of, yeah. So, like, for example, let's pull up this here as Mark was looking at. So, yeah, and like some of these have, let's just put it in because we're looking at implied volatility earlier. Here is implied volatility. We'll throw that in at the bottom. Oh, look at the volatility collapse. Now, great example of volatility collapse, why somebody would run that volatility scan. Look at that, post earnings right there. Earnings right there. Now, is it gapping up a little bit too on earnings? Yeah, it could be. But look at that. That is what you get a lot of times after this. And that's why individuals like to run those volatility scans too, for breakdowns in that. But oftentimes tied to earnings. I think it's a very interesting catch there, Mark. All right, let's do it. Let's look at some of the earnings. Now we know over here in our Market Watch tab, we have a lot going on. I always look at the monthly view right there so I can see. We have so many, we can't even fit them in the box. Pulling from the S&P 500 earnings specifically, we got a lot there. We're in earnings season. Now, if we wanted to find a company that had an earnings beat, this is the one that Robert had developed a while back, which I thought was fantastic. It was a different sort of a coding. It took it a different way than I was looking at too. But I'll go into the scan. Well, I have it over here. So it's a pre-built scan. I've been given permission to share this. And it's just 1/4 beat. 1/4 beat. Now, a lot of times you'll have a gap in here, and we do have some gap and goes. I taught a class on the gap and go, But let's just go like this and pull it up right now. So these beat in the quarter. Hang on a second. Let me just double check. So what you want to do here, because remember, we can see our scans on the left-hand side, but did they beat earnings? For example, Amazon will show up on this list. They crushed earnings, right? You see the estimate there at 158, excuse me, one $1.59 and change. They came in at 278. That's a big beat. There would have been a quarterly beat here. Because I have it in a watch list scan, that means I've already built the scan over here and I've got to find it. So let's load that one up. In fact, I think I copied it over here. No, I didn't. Okay, so that's fine. So let's do it right here. Let's let's load it up. And 1/4 beat right there. That's the one. Now I'm going to put this in here. Just a quick note. I don't know why. Okay, it looks like Robert maybe had posted it too, but this was the scan. Just one second, folks. I just want to make sure. Okay, right here. I'll pull it up so you can see it. Now, notice this actually pulls back over the last 20 days, which could be interesting. A lot of times, big earnings. I mean, have you guys seen this? This is why I think an earnings beat can be so fascinating because honestly, over the past 2 decades, looking at a lot of this, I have seen companies that look like this. Their chart trends are like this, and they're down. They might be sideways for a very, very long time. They might also look like this. They've gone up for a while, and now they've been holding into a sideways channel. Over this time frame, earnings, earnings, okay, earnings have been going up. Valuation metrics are looking more and more favorable. Price to earnings, price to sales, price to cash flow can look a lot better if earnings are climbing over this time frame or even down here. If you get an earnings break where it beats expectations sometimes, not every time, but this is where you might find this happening. It finally breaks out of the range. It finally breaks out of the range. Have you guys noticed that? I like to check these during earnings seasons because I've seen a lot of yeah, big bottoms prices break out over um, an earnings announcement. And this is a cool way to tap into it. So I'd like to say, we can kind of keep it a little bit closer than 20. Instead, I'm going to do 5. 5 days, a 5-day lookout here. So in the past 5 days, that's our lookout. We had an earnings beat that occurred in here, and we can get, if I just run this right now, you're going to see the same results pop up over here. Now, what's really, really important when you do this, folks, in fact, if I just look by symbol, they'll be the same. Notice I can scan it so it updates every day during earnings season. Very, very helpful. Come over here, and now I'm going to do this because I went to the last 5 days, and this is going to be a longer list. This is the past 20. Still going to catch the 5, but if I go back in and well, here it is. I'm going to save it and update it to 5. Now, why is that important? Because I want to see 5 over here, not 20. It was saved as 20. Now it's saved as 5. Just a quick note. Okay, so on that, by the way, while I'm here, we got to share that. It's a really great one to have. Here you go. So quarterly beat was right there. All right, there's that thing script. Again, not guaranteed for timeliness or accuracy. And let's see. It looks like Robert has one there too. So I don't know if he might have updated that. Oh, that was for the sector line chart. Oh, thank you. So he's got a lot of these, and appreciate that, Robert. And thank you for sharing as well. But let's go over here and highlight some of these right now as we look at them. Okay, so on the earnings beats themselves, and more recently. So we had there's the alphabet one. Now here is a big move to the upside. Obviously, that was an earnings beat. You can see we're highlighting that right here, right now. Now, with that, sometimes you might get a measurement gap where prices could move higher. I think they came in and as I was looking at their numbers, they seemed really strong across the board relative to expectations. And there you go. Look at that. 2.63 to 5.11. It spotted it there for us using those ThinkScript tools to help us out. Um, what about, we were talking about the risks, maybe upside risks of oil going higher. Well, what about oil service providers? Look over here. What do we got here? Building on that risk, post earnings with an earnings gap over here and a run. Now, one of the things we'll look at in my swing trade class is this right here, kind of just a flag type pattern. I'm not the only one. I know several coaches do it, but this is one that can be kind of interesting in terms of where prices could be possibly going. I don't know. We see maybe there's a risk to oil going higher. So perhaps we could try to participate in a move like that. We're just, these are just sample example trades going through the process of what maybe a trader might be looking for. That's all we're doing here, folks. But let's do that right now. We'll just put a potential exit order down here. Remember, stop orders aren't guaranteed for to fill at that specific price. Let me go ahead and just come in over here. We're going to go ahead and just place a trade here. Right off of the earnings beat scenario and setup here. So let's go down here. I'm going to clean this up a little bit. I'm going to go to GTC. That's just showing on my other screen here. Good till cancel on those stop orders. I'll go ahead and go with 100 shares over here. Now this one was going to be quite a bit higher, like an 80, and this one will be below our range, but I do like to adjust it based on the chart. It's so easy to do. You guys might agree with me on that. It's a piece of cake. So here we go. Let's go ahead and click confirm and send. Let's always read our conditions there to kind of take a look at. Now, what is this thing? Okay, so there you go. And take a look at what we've got. Let's go ahead and place that trade right now. Okay, that is the trade. And I'm going to go ahead and, while we're waiting, I'm going to sneak this stop order up to just below that level. So in other words, we'll try to get out. If it does break lower, there's the fill. There are those two stop orders. I didn't quite have it right. That's okay. Just grab that sucker, adjust it down, and that's kind of the price setup. Now, what is also interesting about this? Yes, we are using ThinkScript. Correct. Look over here with me. Did we take out these highs? Yeah, we did, and we're kind of resting on them too. Some traders might look at that as an indication of support. Now, what about the move coming up? We've had several classes here on how to detect volume. Look, see the volume move coming up? Look at this, generally speaking, volume was quite strong, but in the consolidation phase of the flag pattern, resting above prior highs, volume went down, baby. She went down a little bit. Not a lot of sellers. In other words, we kept those price levels as as prices are going up. Now, you think about it. Well, what about BRK? I mean, I always like to look at the fundamental aspects of it, possibly. Here is BRK. Okay, so technology serves energy and industrial sector. Um, Appraisal, production, development, rejuvenation, decommissioning process, onshore, offshore. Now, we can say here, we don't have a Straits of Hormuz locally. So things are going okay over here in the US, I mean, in terms of oil. Okay. And that could be, there could be demand there. We might be seeing that in the chart. So a couple of different things. We try to build this on other themes in here using these great ThinkScript tools. But there you guys go. That is our trade. And I was going to, well, I was going to look at something else. Oh, yeah, one quick note. Just a quick note here, folks. Got a lot of moving things going on here, but just so I get this down, because we did put a that order on there, that stop order. So there's no guarantee the stop order, there's no guarantee that the execution of a stop order will be at or near the stop price. That's all I was trying to say there. Okay. Now that's in place. Let's continue on. There's more than just this in terms of what has been gapping and moving. How about Caterpillar today, folks? That's right. Up 80 points today. Now it's an expensive stock. It's an expensive stock, but there's your move. Could this be forming another swing trade? You can see over here, this was one of the trades that we did do in the swing trade class. It was one of the classes we did, and we hit our target, which was right there, as we did what? We broke higher. So it was one of those stocks that just broke higher, hit it again, but here we are again with maybe some earnings to be mindful of there. So that could be another one that could be looked at. We're going to switch a long ways away from CAT, go right into Citigroup. Here's another one that has broken up above its range and kind of flagging down with more recently lighter volumes as well at that level. Now, we've been looking at this, a few of these. We looked at implied volatility. We looked at the hammer pattern. This is kind of a hammer-ish type pattern. It's a doji, right? Right now as it stands, and that's within this bar. But is there a Caholt? Let's take advantage of one more ThinkScript capability here. Some would maybe put a trade on here, but we'll see, what's maybe a paper trade to check it out. But what if I just said this? What if I said, just notify me via text message if we break above this level? I'm going to right click, create alert right there. I'm just going to say above doji. Okay. And to relook at it. And then therefore that could prompt somebody, as an example, to place a trade there. Now keep in mind that the ThinkScript or the alerts themselves are not guaranteed to be delivered or delivered at any specific speed or time frame. It should not be used as a replacement for actively being aware of your positions. Now, have I had any issues with these alerts? I haven't. I haven't, and just like these sorts of alerts I've been placing. But I wanted to note that because, yeah, we did want to state that, yeah, things can happen, but I've been using it for a long time, no issues. So I just want to let you know that they have been very accurate for me, but we just wanted to state that. Not guaranteed for time and strategy. Now, a quick note down here, make sure, folks, that you do have this down below. When I started off, yeah, I was wondering why I wasn't getting them. I didn't have this clicked, notify, sound, and mobile. Now, up top, you can set this up under setup, application settings, and under notifications, you can put your number in there, your cell number, or your email if you prefer that as well. Okay, so a lot of great tools to help us really define these and spot potentially interesting sort of setups over here, etc. Now, folks, if you're getting any value from this discussion, uh, and you like what Kevin and I are doing here, smash that like button. It lets us know that you were finding value. If you are finding value, that'd be great. And wanted to also state over here that up top, here is our Trader Talks channel, and would love to have you guys subscribe as well. Now, here are our list of playlists you can see up top. And there he is right there up top, your man, Kevin Horner. Check out his Trader Talk stuff in the morning. It's great. Does a great overview of the markets and gets everybody set for the day. Got some other classes in here as well, too. But there's the Trader Talks of today's market. Be sure and check out his stuff. We've got some other stuff in here, too. I was telling you about the earnings gap and go. I wanted to show you where that is at. Last week, we did the Ichimoku scan specifically. And we did that. We found that we could do that pretty easily within the condition wizard just by going breaking above a couple of those clouds, as you recall, right? And that is there. But so you can click on those. In fact, if you want to take a look at it, well, any of these, I'll just throw this into the chat. But I just put in this area here, and be sure, Kevin, to type in your stuff too. But here's Kevin's right here too. Here's his Trader Talks view list. A lot of great stuff in here as well. So let me do this real quick. So here is the ThinkScript playlist. I should have that playlist in the description down below. And here is Kevin's as well. Trader Talks in the morning. Great stuff. All right. So there's his. Very good. Now, if you wanted to look specifically, let's just say you want the gap and go. If you subscribe, just click on the little search icon here, magnifying glass, and just type in gap and type in enter, and there's some with JB. There it is, coding the earnings gap and go. You'll find that in there as well. It was done about a year ago. and we did that one too, which is more looking at like, hey, they had a gap plus they ran higher. We could include earnings in that. I did want to show you earnings today because earnings is we're in the midst of earnings season, and that can be really helpful. Now, um, let's continue on. So as we're trading and looking for different ways to, you know, explore price action, um, one of the things we had looked at previously is the compression of prices themselves. Bollinger Band moving below the Keltner channel, the TTM squeeze, as you guys will recall. Now, the TTM squeeze, we do have, I'll pull it up here on the chart so you can see it. This can be really quite helpful. Here is the squeeze. It's a pre-built indicator. Got to click on the right spot though. That's mandatory. If you come over here and you go into the wheel, I'm just going to take off the histogram and just show when the Bollinger Band went within the Keltner channel. And you'll see that over a particular range. And basically what's going on here is in red, that's where you had compression. And notice what you get outside of that compression. Boom. You change, and sometimes you can get a magnitude type move. Prices were tighter here relative to the time frame that we're measuring over the prior 20 bars. And what happens, Bollinger Band below the Keltner channel, a couple of interesting indicators to show us that extreme low price volatility, sometimes you can get big moves out of there. Now think about this. This can be interesting for Caholds and other setups. You know what else that can be interesting for? The market. The market's been going into a tight range over here. Now, we just did break above today. I was going to highlight this, but yeah, just because we're in a 30-minute chart doesn't mean that we can't get some indications over here because volatility, it appears, directional volatility has begun to break. Now, if you come over here with me and just go like this, just I'm sorry, right here, we'll go into the TTM squeeze. I'm adding this on into a 30-minute chart. Take out the histogram. Look at this. Do you see that? When did we get that TTM? And I'm looking at really 3+ days of the TTM, folks. It was right in there. It was right in there. And we began to break out of it when prices are just barely actually, I'm drawing it off a little bit. I went a little bit further to the right. It was about right there that prices were beginning to show an indication. Now, did they move off that bottom? Absolutely, and we made an all-time high actually. Let's just put it this way: we broke outside of this range right here, but we have oftentimes these clues that can be really, really quite helpful. Now, if you come over here, I'm going to do the exact same thing here too, so you guys can pull it up. But here in TTM, just type in TTM squeeze or price compression. Let's see, how did I do? Yeah, TTM squeeze. This is the code for the scan that I put in. I'm not sure if they might just explain it here. There we go. How to swing trade. So this is a swing trade that I did over here, which is interesting to take a look at. Now that was a year ago, the swing trading class, but we did that um, in the swing trade class with the TTM, and we had others as well. Yeah, exploring momentum setups early with multiple TTM squeeze examples. Okay, so that's one as well. I'll just plug this into the chat too if you guys want to take a look at it. But it was an older one. But we wanted to do in this class each and every week, we like to do those example trades where you might be seeing those interesting setups. You can run the scan through there as well. Tie that in with what else we do, right? With price patterns. Today we looked at that script for the hammer, which is interesting with the Cahold. We looked at implied volatilities as well. We looked at earnings beats. We'll have those in the description, and I've shown you where you can find the classes here for the others. And by the way, those codes are in the description section as well. So with that, everybody, smash that like button. It's been great being here with you today. Be mindful, too, of market conditions. We are in an interesting environment where volatility is starting to expand. You saw that on the 30-minute TTM and others. So just watch those closely, watch those positions, and It's great to be with you, folks. Look forward to future discussions. And don't forget, National Investor Day tomorrow. Take care, everybody. Thank you, Kevin Horner, for all your help. See y'all. Bye bye.